Hello, everybody, and welcome to the Fintech Combine. I am your host, Kris Kovacs, the founder and CEO of Constellation Digital Partners. On today's episode, we're speaking to Omar Jordan, the founder and CEO of Kovacs, who has built a great platform for credit unions. We're going to talk about the adoption of technology within credit unions, and we're announcing a very special event that we're going to have at the GAC conference this year. So if you're ready, let's suit up and get out on the field. Omar, welcome to the podcast. Thank you very much for joining me today. I was really excited when we talked about the new year and what was coming, and I said, you know what, I want to talk to the guy who's got no filter on him, and that's and that's Omar Jordan.
That's right. It's a good way to start the year, I should say.
That's exactly right. So why don't you tell us all a little bit about Kovacs and what you guys do supporting credit unions?
Yeah, absolutely. Well, thanks for having me. First of all, it was fun to connect with you and talk about kicking off the 2024 with this podcast for not just us, but for the industry and what we're seeing as fintech leaders in this industry. So what Kovacs does, Kovacs is an automation engine that connects into the credit union's current process, technology, and system to help credit unions process home equity and HELOC loans much faster than they do typically. And when we come into a credit union, we learn that their process runs about 20 to 30 day turnaround on a home equity loan, and sometimes even longer. We've seen 60 days, and that goes for credit unions of all sizes, even the larger credit unions, your top 10. Some of them struggle shortening that lending cycle. So our automation engine helps credit union process home equity loans much faster. We say in hours versus weeks.
What a huge difference that would make for a credit union member who's waiting on that decision, right, to know whether about they're refinancing their home.
Interest rate is a commodity. Fees are a commodity. It comes down to experience. We've got fintechs coming into this home equity lending space so hard, so heavy, because it is the time for home equity lending. Rates are on the rise. Home values are bigger than they ever were, or wide enough. And then now, what do I have to consolidate my debt as a typical American, which most of us have carried debt now more than we carried before, at a higher interest rate than we had before, and therefore, my only way out of that is to consolidate via home equity loan.
What inspired you to start Kovacs?
I will tell you, I worked at a top 5 bank in 2005. I was a branch manager for one of the largest mortgage lenders in the industry. I'm talking globally. And in 2005, Kris, it pains me to say this, we had better technology than credit unions in general have today in 2005. And when the Dodd-Frank CFPB was created, the Dodd-Frank Act, it was an aha moment for me because I worked with credit unions. I owned a title company at some point, and I worked with the local credit union group, and I just learned that going against what the CFPB is putting out was going to be an uphill battle for a lot of those community lenders that don't have what maybe Wells Fargo would have, which is an entire floor full of compliance and attorneys that can help them navigate through the maze of the CFPB and lending and the new era of lending. So what's interesting, though, is the CFPB's rules, if we really sit down and read a lot of that content, and the NCUA and the FDIC and the OCC, all of these governing bodies for lenders, they're rules that make sense for the most part. Now it's just understanding them and learning how to navigate this new era. And so for me, that was what really inspired me I sat down, I read the entire, they call it Regulation Z, Reg Z from the CFPB, and that tailors to lending. It was 120 pages. I fell asleep a few times, but at the end of it, I thought, I've got this. There's a way to help credit unions. There's a way to solve this problem through technology, and you bring on, you raise proper capital, primarily from credit unions. They were there for us when we started, and you hire the right talent, and then you take the company to where it's at today.
So, did you start the title company that you were working for? And is Kovacs your second startup?
I always say Kovacs is my fourth or fifth startup. I started. Yes, I did. I started a title company once the collapse happened. The recession, the big recession that took place in 2009. I cashed out my 401k. I thought, I'm going to do something here. So I actually started a background check company, and then I started what we call a notary signing service company, where you've got all these lenders across America that have borrowers across every nook and cranny of the country, and so they don't have branches there. So our job was to go find notary publics to actually go execute the loan documents at the kitchen table at the borrower's home, and that was a service we provided. We did over 13,000 loans a month just come through our system. It was a lot of fun. I think that's where I lost most of my hair, but it was a lot of fun. And then there was an idea again of how do I introduce more technology forward solutions to the industry, and that's how I got introduced to the CFPB, and I thought, I'm a problem solver, and it's a problem for me, man. Everything is like, I gotta fix this. I'm always fixing things, and maybe that's why we become entrepreneurs.
So, talk to me about being an entrepreneur and kind of working your way through those, identifying those gaps, seeing those opportunities, and really kind of designing new solutions to go forward. Where does the motor come to do that? Like if you think about kind of your background, you've worked for big companies before. There's a lot of people out there who are thinking about, hey, I've got an idea, I'm thinking about taking it forward. Where does the inspiration come from that? How do you get up every day and do the hard work of building a new company or a new service?
Well, it might be different for me. I'm an immigrant, so I don't necessarily have a plan B, and I'm sure a lot of us don't have that too. But coming here without my parents into the United States, I only have one place to go to at night, which is my house, and so I have to work really hard to make sure I create that safe environment for my children, and so I cannot stop focusing on why I do what I do, and I'm sure that is the case for a lot of them. So I think what drives me is just the desire to compete with myself, and sometimes I ask myself the same question over and over. Could I have done it better? And I don't know why my brain is wired that way, where I could do it better, and therefore I'm going to continue to push and push and push, and not just so it's a challenge against myself and no one else. It's, can I challenge myself to deliver a better solution? Can I challenge myself to, fix something better than anyone does? Can I look at a problem and really look at it from a different light? But most of the time, it is ingrained in our heads that in order for me to better my lending process or enhance it, I have to go invest in a loan originating system, right? That's what most lenders do. Oh, I need a new loan originating system. Well, what I like to do is focus on the bigger question, which is, what business problem are we trying to solve? And that's the practice that we carry throughout our entire product life cycle here. And luckily, it's not just me that asks that question. It's most of the leadership team and most of the team up here. So you've got to look at a problem and think about it differently in order for you to be able to solve that problem at scale. Outside of that, really, then the one I think you asked, what would you
How do you motivate? How do you get up every day and do the hard work of building a business? Right. I think you gave a really good answer. Right. I don't have any other. I don't know any other way. Might be one way to put it.
I don't know any other way. You're not wrong. I cannot. Every day for me, if I slack off, is expensive. Right. It's got tremendous, tremendous consequences. So I have to keep going.
Yeah. How did
Somebody
you?
said, I'm taking lunch. I said, what's lunch?
That's why you're in such great shape, Omar. So how did you settle on working with credit unions? So Kovacs is a QSO, right? And you talked
Yeah.
about taking credit union investment. How did you know about being a QSO? How did you move from entrepreneur startup to somebody who was building a credit union service organization?
That's an interesting story. So back in 2017, I was watching this show called Shark Tank. And Coviance, formerly Lender Close, we just rebranded, and that I had about 27 customers and less than $500,000 in revenue. And I thought to myself, man, if I only had just a little bit more working capital, I can hire two more people instead of me being the CEO, the CFO, the sales manager of myself, because I was the only sales guy, the product manager, and part-time developer. I can maybe hire people to help me out. So I reached out to a gentleman by the name of Brian Lauer,
Mm-hmm.
and I'm sure you've heard the name.
Mm-hmm.
And I said, Brian, don't know what this thing called CUSO, Credit Union Service Organization. Tell me about it. So he explains it to me. I go to work. I connect with a couple of local credit unions who one of them happens to be a customer of ours. And that's how the journey started. So we became a CUSO, took investments from credit union. We also have venture capital on our cap
Mm-hmm.
table as well, here in the state of Iowa, Next Level Ventures, who now manages the funds for the Circle Fund in a small world. But that's how the journey of being a QSO started.
Today you serve both banks and credit unions, correct?
Yeah, we're a different type of QSO, or maybe not so different, but we are founder. We're a founder led QSO, I should say, and,
Mm-hmm.
and some QSOs do get started from credit within the credit union. You think it's not an insurance QSO for the credit
Right.
union, right? It's a founder. I don't know if there's a term for it, but it's a founder led QSO. And what makes us QSO is the fact that we have credit union investment into our cap table. But yes, we
Mm-hmm.
work with banks, community banks. We've got a top 50 bank on our customer list, and we really enjoy working with both banks and credit unions, and really stand for what they stand for. On the community side of lending
Mm-hmm.
to our community, we really enjoy that process.
Right. Right. When you're working with a credit union or a bank, how does your technology, where does it fit into in kind of the technology landscape, right? Is it it's not an LOS, right?
Mm-hmm.
It's not a core system. Explain to our listeners how you identified this area and how it plugs into the technology stack for the credit union.
Yeah, most of the time, our customers come on board, and it takes them about one or two orders to go, I know exactly what you do now, right? I can feel it. And so, yeah, it's a story. It's connecting the dots for a lot of our customers. As I said, most lenders just think I need a loan originating system that's going to write to the core, and that's how I'm going to enhance my policy or my process for my members. And so we have we're launching a point of sale application that's going to be a premium experience for the member, and that now can connect to either the LOS, right? So we can send the data back to the LOS. You do your underwriting decisioning into the LOS. We then bring in Coviance to help you with what we call collateral decisioning, so data on the asset that we're putting a lien on to make sure that meets your lender requirements. But not only do we give you the tools that you are familiar with, like appraisal, title, flood data, all of that, but we package it in a way that allows you to be automated, right? There's no need for a processor, for example, to push order a flood button, wait, push order an appraisal button or evaluation button, wait a few days and push the title button, right? That seems counterintuitive. So we give the processor time back to allow him or her to engage more with the member and focus more on maybe the 40% of loans that do require hand holding, right?
Mm-hmm.
So 65, 70% of your loans can be fully automated. And then you've got that segment of customers that don't necessarily have the W-2, employment income,
Mm-hmm.
or that need some handholding. Those are the members
Right.
that need our attention the most. And so we try to automate all of that. And then I don't know if that explains your question or answers your question of where do we fit. We can fit in the front of the process, the middle of the process, and we've got a segment of credit unions that do not have an LOS that leverage
Mm-hmm.
Coviance as a tool, right, to process the loan. So I don't know where they're doing their credit decisioning. Maybe it's something that they do, off or on paper, and then they come
Mm-hmm.
back and do the collateral and the rest of it. But these are some of the integrations that we will work on, as we move our business forward. And that's what's fun about being a technology platform
Mm-hmm.
for a lending solution, and just inviting these fintechs to come in and build onto our current stack to offer our users the best experience possible.
Talk a little bit about how you put together a strategy around platforms and delivering that service to others, right? I mean, that is certainly, platforms are super hot. Obviously, we at Constellation believe in them wholeheartedly. But it's what I love to see about it. It's a growing model in our industry, right? So, talk a little bit about how you put together the strategy. You and your team put together the strategy around platform delivery of the solution.
It's funny. I learned it from you, actually. I heard you talk about a platform back in 2019 at the Constellation Launch Conference, and I thought it was such an inspiring way to do it. So the way we thought about building technology was, let's go find a vendor. We still do some of that we like,
Mm-hmm.
and put that vendor on our platform for us to then give it back to the customer. And today, what we strive to do is become this lending as a service technology platform for lenders. And we think about it different. We want to give our customers the ability to create lending products by leveraging the tools and the technology integrations that
Mm-hmm.
we have within this ecosystem of partners. So
Right.
if you know Jenny Vipperman, CEO at ORNL Credit Union, tomorrow decides I want to do a home equity loan that goes up to 133% loan to value and does all these things, and I want it
Mm-hmm.
underwritten in less than 3 minutes because these are the parameters I'm going to use. We give that credit union the ability to create such product on our platform. That's what
Mm-hmm.
platforms do versus just going to maybe an LOS to do credit decisioning. Does that make sense?
Right. Yeah. You bring together a variety of tools, partners, services, right, that make building a new product holistic and easy to do, right?
Yes.
And you're not having to go off and do your own integrations to things, which is really the important part
Makes
of
it
it,
really
right?
simple, and that's in the spirit of partnership. I mean, that's what Coviance means.
Mm-hmm.
Co is the first two initials in our name. Is that cooperative partnership with our customers.
Mm-hmm. Mm-hmm. Um, what trends do you foresee? So, well, it is the new year, 2024, right?
Yep.
What trends do you see coming, say, in the credit union and real estate markets?
Well, I've been paying a lot of attention to how credit unions and now community banks are actually looking at member score,
Mm.
right? So that's been really interesting to watch, and I think there's some AI technologies out there that are actually doing a good job with that,
Mm-hmm.
and in the process, and onboarded a lot of customers on that mindset of looking at the member differently. It's not down to the FICO score anymore, right?
Right.
And that's one thing that Rodney Hood and I had a podcast as well together, and or webinar, and he spoke in details about the impact of FICO and how it not only impacts the person, but it impacts the community and an entire culture.
Mm-hmm.
And so learning about your member in a different light, that helps. The other segment is, you think about real estate lending in general, and historically, and what we see across the board is most credit unions, most community bank have followed the 1970 model where it's Fannie Mae, Freddie Mac policies, and this is how we've done it for the last 30 years, and we can't change it. Why? We don't know, but that's just how
Mm-hmm.
we do it, right? Even though, going back to the CFPB rules, the NCUA, the FDIC, and OCC. There's a lot of interesting flexibilities in there that these regulating bodies have actually given credit unions, community banks. Specifically, maybe you talk about automated valuation, right?
Mm-hmm.
I can walk into a credit union right now, Kris, and I say this on every podcast almost, and apply for a $10,000 personal loan and walk out in 30 minutes with $10,000 cash in my pocket.
Mm-hmm.
Same credit union, I walk in there, apply for a home equity loan, put my house as collateral. Okay, you can take it away from me if I don't pay my mortgage. I have to wait 30 days. Why? Because they have to do an appraisal. You don't have to do an appraisal. If it's under $400,000, it's automated valuation, right?
Mm-hmm.
I have to do title insurance. You don't have to do title insurance. Why? Why are we delaying that process? Ask yourself, what business problem am I trying to solve? And let's work together, right, with Kovacs to help you solve that problem.
Yeah, that's a key concept in product management, right?
Yes.
Is focus on the problem, not the next solution, right? And let that kind of drive you to the solution. A lot of times we see folks who are copying other people's, they've got a super checking account, so I'm going to have a super checking account. And they don't necessarily understand the problem that we're trying to solve.
So let me answer your question differently too. You asked me, what do you see the future of lending, especially on real estate lending? It's happening right now because borrowers are deciding which fintech provider they're going to go with.
Mm-hmm.
Are they going to go with a fintech provider that's giving them a home equity loan in 5 days or less, or the credit union that's going to take 60 days to make that decision?
There's no doubt who's going to win that.
Right.
I mean, when people come to an institution, they need money. There is a time frame tied to it. Right. It's I need a car, I need a home, I need money out of my home from a HELOC perspective. None of those the people aren't doing that just to explore ideas, right? They've got some kind of need tied to it. And as long as that need's there, speed's going to be one of the differentiating factors, and it's going to win business.
It will, because everybody has the same interest rate. Maybe your credit unions are lower by a few basis points, but experience matters more to me. I'm paying $200 for an Amazon Prime membership because I want my packages tomorrow.
Right. Right. What do you think the impact of artificial intelligence is going to be? I mean, obviously, about this time last year, we started to hear about ChatGPT, and it was very exciting to go in and have it write your term paper for you, right? And do a blog post or something else. But I think it in my mind, it's moving very, very quickly. What's your take on how that's going to impact our business?
I think it will at some point, and quite dramatically. Maybe it could be creating new policies, right? Much faster than they historically have taken. Educating, launching training programs much faster than we historically have done. Educating our borrowers, our members on loan types, again, much faster and fluidly. And I think there's a really good way to look at how AI and specifically ChatGPT can help us as an industry. And there's the scary things, that's the inevitable. There's a bad actor and everything, but there's a lot of good ways that we can actually take that technology and apply it towards moving what we call this credit union movement forward. And,
right.
And I think relying on such elements to, again, create policies much faster, to be far more adaptable, and then educating our members through said technology with what products mean, and as long as it makes sense, right? Mm-hmm. And why not apply some of that into the user experience where members interact with the lender on a daily basis? What is a home equity loan? What's a HELOC? What are they used for? I think members rely on maybe articles or Google, and so what if we actually introduce content in front of them that actually helps them understand what is their credit or worthiness means, and financial wellness and so on. It could be applied in a very, very healthy. What's your take on it, Kris?
I think we're starting to see it, but I think we're starting, like most technology, in the deepest part, and like the kind of the deepest part of technology itself, right? Developers are starting to use things called co-pilots, which are developing code for them, and they are becoming, in some cases, 10x developers, right? And in those cases, what they're able to do far exceeds others. It's cleaner. It tests better. And I think that model of employee co-pilot is
Yeah.
something we're going to see a lot of in our industry within a couple of years, right? I think we're going to see loan processors that have a co-pilot that is trained by the organization and
Yeah.
by them, right?
Uh-huh.
So them for tone, language, like how they speak, and then by policy, to your point, by the
Yep.
organization, and then that's going to be a co-pilot for them that's able to answer the emails. Because one of the frustrating things I always had when I applied for any kind of real estate loan was, okay, what's the status, right? I need a status. What's going on? What do you need from me? And if you've got AI that's co-piloting a processor, they can keep the member up to date all the time. And
Yep.
I think there's going to be opportunities like that, and that touches everything, right? We all get too many emails, too many messages, too much noise, and having something that responds and does what you need to do in your voice with your language based on your training of it, I think is where we're really going to see a lot of efficiency gains in the future, right? Margins just continue to get crushed in the
Yeah.
industry. It's no easier on the fintech side, right? And one of the things I'm going to ask you about is 2 years ago, it was growth at all costs, like do whatever you can to grow. And now it's like, no, you got to be profitable. Okay. Well, now efficiency comes into play,
Right.
right?
Mhm.
So I think this concept of employee plus co-pilot is going to be really, really important, and it's going to be pervasive in the future.
Oh man, I agree. And it's going to better the way we do business. I feel so. I'm looking forward to see how that unfolds.
Yeah, it'll be exciting. It'll be exciting. Well, let me ask you that question though. So, we've both been around, and in full disclosure, I am on the
Yep.
Kovacs board, right?
Yep.
But we've known each other well before then. Talk about this change in funding, fundraising, this mentality in venture, where when we started, I mean, it was just 18, 24 months ago, it was grow at all costs,
Mm-hmm.
right? The only number that matters is more
Top
sales, more
line.
growth, more sales, more growth. And then the world changed 18 months ago, and it was like, oh, now you need to be profitable, right? Talk a little bit about navigating that change, that title change in capital, and kind of what you guys have done to adjust to that change in environment.
Well, you're not wrong. That's exactly what happened. And funny, I was actually 2 days ago. I was listening to I don't know his name, the WeWork founder,
Mm-hmm.
doing maybe I think it was on DealBook talking about exactly that topic and said it exactly the way he said it, where it was grow at all costs. Don't worry about capital. Keep burning, burn, baby, burn,
Mm-hmm.
right, and go just focus on that top line revenue. And we did. Most founders, most startups, executives just let's go get revenue, sales, sales, sales. Doesn't
Right.
matter. Go to the biggest conventions, spend the most amount of money,
The biggest booth you can buy.
the biggest booth you can get. Who cares about how many MQLs you get, just as long as you're increasing sales.
Right.
And MQLs, marketing qualified leads. And here we are. Something happened. Was it 18 months ago? Yeah, and then the tune just changed. Where
Mm-hmm.
you're not profitable. We, we're not gonna give you the multiplier we initially thought back
Mm-hmm.
2 3 years ago. And so the whole thing just changed dramatically. What drove it? I mean, it's a mixture of things. It's
Yeah.
it's the market. It's venture and private equity firms maybe realizing we shouldn't put our money in everything. We should be strategic on where we apply it. I don't know, but it does
Right.
change. It does change on how you handle business. Instead of going to 15 conferences a year and making stuff up, now we should only go to 12, right?
Yep.
Or maybe we can go to the 15, but we can't send that many people. We have to be really strategic on how we deploy our
Mm-hmm.
marketing capital on the sales front of things. It's we've got to how do we drive certain behaviors, right? We're now focused on higher gross profit margin type solutions versus non. And then from a product perspective, it changes the way you build products. Now, luckily, in my business is not necessarily owned by shareholders that demand a massive return, right? They're not we're not publicly traded, so the pressure isn't on me to squeeze every penny out of our customer. And we can still control what products we put forward, but that doesn't escape our mind today where does this product bring the company value? Because capital is also scarce, right? Not everyone is able to raise, capital like we used to be. When interest rates were 0%, money was cheap. Now interest rates are higher, and so money is a little bit more expensive and harder to get your hands on. And so that's the challenge we run into. And on top of that, as you know, lenders have banks and credit unions have a liquidity issue right now. 2 years ago, they had nothing but cash and they didn't know what to do with it. And now they're trying to figure out how do we get money to lend out to our members, whether it's a home equity loan, a car loan, or whatever the case might be. So it's a different environment. I don't think any of us has been through an environment like this where home values are still on the rise in some cases, but maintaining their height. Interest rates are higher than they've been in the last 10, 20 years, and yet we've got more unsecured debt, Kris, than we had back in 2005. It is, and then unemployment is still stable. It's such a sort of like we don't know what's going to come around the corner next, right? And if I'm feeling that, what do you think an executive at a credit union or a bank doing, trying to make decisions for their institution, to make sure they're still around in the next 6 months? It's got to be tough for everyone, but it's a different tone. And what are we doing to navigate through that? To answer the second part of your question, it's everything we can. We are making sure we're looking at the entire expenditure and, if we have to shave off some things to make sure we extend our runway of access to capital longer, then that's what we have to do.
Yeah. What would you bring up a thought for me. If you were an executive of a credit union, so don't pick out any particular credit unions, right?
Yeah.
But if you were an executive of a credit union today, what would your approach be to technology, system replacement, and kind of where you were going?
Well, I would start from zero. I'd say, okay, 2024, we have zero technology on the books. I bring in my leadership team. We have zero technology on the books. What do we need to service our members? Okay. What do we need to make sure we have access to it, right? It's solving the business problem, because we see this a lot, and you do too, where it's constantly living. When you're in the business, it's hard to look at it from outside the business. And so we are brainwashed to understand or realize that we have to have a loan originating system in order for us to have a better experience. We have to have, a mortgage loan originating system, and then a commercial loan originating system, and then a consumer lending loan originating system that also does home equity, even though home equity is also a mortgage. So there's this spectrum of all these technologies that move the credit union forward, or so we think. Right. And so I would start from day zero. And the question, the top of the paper, the question is, what business problem are we trying to solve? And what is the impact of that problem for our membership and for the credit union? Money aside, right? We spend a lot of money on shiny objects. We spend a lot of money on necessary stuff too. And so that's the challenge that I think credit unions face today. And then I'll add this: there's too many cooks in the kitchen sometimes, right? You just have to make a decision. Somebody has to step up and say, this is what we're doing, and this is what the impact of it is, and we're gonna live with that risk.
That's the entrepreneur in you, right?
Yes.
I having come from credit unions and now living in that entrepreneurial world, I feel that difference very, very real, right? For sure. It's and I appreciate the blank slate. right? Start from a blank slate and go, because it's almost though you bring that up as you're making decisions inside of a large organization today. You think you're buying something, but what you're really doing is you're fitting something into a puzzle that you didn't design, right?
Yeah.
And you've got all of these previous decisions that are wrapped up in,
Yeah.
capitalization and contracts and, end dates and everything else. And you're left with this much room in this shape to try to
Yeah.
innovate. And in reality, it's almost like those other decisions are dictating the direction you're going. So being able to think about it from a kind of a blank slate perspective, I think would be powerful.
Well, it's different for credit unions by their size. What we learn in a lot of the smaller credit unions, Kris, is that puzzle you're talking about have been designed 30 years ago, and there's staff still at the credit union from 30 years ago. And so the new leadership coming in order for them to, take this puzzle, away, it's going to bring stress to the senior leadership team or senior leadership or senior staff at the credit union. And therefore, it's not touched, right? Because we're too afraid as leaders to make tough decisions sometimes.
Whereas when you're an entrepreneur, and as I always talk about it, I'm on the shot clock, right? I know exactly what our runway is. I know where we're going. Like, we don't have time for the niceties of how we used to do things, right? It's how do I need to do things today, right?
Yep.
That's a really powerful point, Omar. Other things we're gonna see in 2024, right? So, what conferences are you looking forward to? Are there new experiences that you're looking to bring? Talk to me a little bit about what the promise of 2024 holds for us.
Well, in 2024, for us, conferences-wise, as you know, the year is always get kicked off by the biggest conference in the industry, and that is Government and Affair Conference, the GAC 2024. So that's how we kick it off. Kovacs has, and that starts at the end of February. So for us, Kovacs, March has 4 conferences back-to-back every week in the entire month of March. So we're going to divide and conquer. But we'll have a team at GAC. Another conference I'm looking forward to is the ICE conference, the Intercontinental Exchange, which is the company that owns Encompass, Simplify, and others. So we're integrated into their technology. So I think it's our first time. It'll be fun for us to go explore. And then we'll be at the CBA and the ICBA, Independent Banking Association, and the Consumer Banking Association conferences too. That all of that is happening in March, and then just keeps on going from there. It's conference season until November.
Now I know there's something special coming up at GAC. What's happening at GAC this year?
So last year, Kris, we hosted an event at the Yardbird, and the Yardbird is across the street from the convention. It was such a great event. This year, we thought we're going to do it different. We are going to invite some of the best fintechs in this industry to help us put on this best happy hour, best show at the GAC. And so we did. And so we're calling it Fintech Fusion 2024, happening at the Yardbird across the street from the convention center. And it's such a nice spot. It's big enough to host a great crowd. Very close, strategically placed. Starts at 4 p.m. And so right after the conference ends. And so most people, don't have anything to do until 6 or 7. That's when parties generally start. But we're inviting people right after the conference to come out, have a drink, drink the day away. I don't know. And it could be water.
Perfectly reasonable.
And, yeah, absolutely. We have a band, a musical concept that's happening, a lot of fantastic finger food, good time. And who's joining us on that journey? So far, we've got Circle Collective and Constellation Digital Partners. So that's you and your team. And then I believe, correct me if I'm wrong, but the folks at Defense Storm are also going to be joining us. So 4 fantastic fintechs, and we're going to host a terrific, or not circles, not a fintech, but it's a fintech, or it's an investor in fintech.
They certainly are making a lot happen for sure in fintechs
Absolutely.
and credit unions these days. So
Putting
that's
together
excellent. Really looking
event.
forward to it. We want to have everybody come join us. It's going to be a great event. And it is a perfectly positioned from a location perspective and from a schedule perspective. I really do think that it's going to be a lot of fun.
Yes. It's on Tuesday. So Tuesday, GAC, 4 p.m. until I believe 7 or 8 p.m.
That's
so
right.
It'll be a great team.
Yep. So everybody look out for it. You're going to hear more about it. Make sure you come. We're looking forward to seeing you there. Excellent. Omar, any final thoughts? Really appreciate you joining us today. Any final thoughts?
Well, I think I always do this, and I cannot be grateful enough for this industry and for the people in it. And it goes from, the teller all the way up to the regulators. We're all in this together. We've seen a lot of good things, and we're going through some hardships when it comes to liquidity issues and other stuff. And, we're going to come out of it together, because this is one of the few industries that actually is a family, is a community. We care about one another. So thank you all for doing what you've always done, not just for me, but for every entrepreneur and founder and fintech CEO, because it is tough out there. It's a lonely place. And if it wasn't for friends like you, Kris, as I said, it's a lonely place. And so I find myself at 12 a.m. sometimes thinking, wonder what Kris is thinking about today. I should call him tomorrow and figure out how we can solve our problems.
Or you'll just text me at midnight.
I've done that too. That's what the board is for.
That's what the board's for. It's exactly right. It's exactly right. Well, listen, I really appreciate it, Omar. You and the team at Kovacs really do a great job. And I think you represent the promise of what this QSO model can do for our industry, right?
I appreciate it.
Solving problems, identifying opportunities, taking advantage of them, building services, and those services then make credit unions better, right? And community banks, they make them better. And that's the whole idea. Yep. So listen, Happy New Year, my friend. I hope 2024 is an amazing year for you, and we will see you soon.
Thank you very much.
What a great conversation with Omar. We cannot wait to welcome you to the Fintech Fusion event at GAC this year. If you check the show notes, there will be a link there to register. While you're there, like and subscribe on your platform of choice, and don't forget to join our Discord server where we keep the conversation going. Thank you very much. We'll see you next time.